Hello everyone, Professor MoneyPigTrading today. January 29, 2023, we're going to talk about the Tesla earning and why does Tesla rally 75% the first 3 weeks of 2023, which is pretty amazing. So let's take a look. So this is a Tesla daily chart. You can see back to September last year has a huge breakdown all the way from 300 down to last year in 101. And now rally back to 177.9. So there's 75% rally since the end of last year. So we'll actually make a brief video, and the link will be at the upper right corner, basically talking about why the Tesla stock dropped so much back to September last year. A really quick recap, because Elon Musk acquired Tesla, and he actually overpaid. He has raised a lot of capitals by selling Tesla stocks. And also Tesla demand has been dropping since last year because of the economy slowing down. And not to mention, because last year was really bad for technology companies, a lot of heavy loss from investors. They have to take the tax loss harvesting starting the end of November until December. And that also aggravated the sales pressure and making Tesla drop whooping about 70%. Okay, and the reason Tesla has been rallied so hard since the end of last year, first of all, if you're not aware of, QQQ is the ETF for the technology sector NASDAQ. It has been rallied really hard. So if you're looking at the chart on the right side, it's the QQQ ETF. And you can see also breaking this huge downtrend. A lot of technology stocks started rallying, including all the fan stocks and a lot of cloud stocks and many others as well. And also a lot of them actually report better than expected earnings because a lot of investors are expecting a pretty bad earnings in this Q1 earning because of the earning recession they said. But so far, of course, the Fed report next week. We still have to see what it will bring to the market. However, so far it looks like most of the tech stocks are doing okay or just slightly worse than expected. Some lower the guidance, but generally speaking, still okay. And also the inflations are cooling down from all the macroeconomic data so far in January. That also boosts the market since investors now believe Federal Reserve will raise only 25 bits on February 1st in the FOMC and potentially going to pause a rate hike. And also Canada Central Bank actually paused a rate hike on Wednesday this week. That also created a huge rally for the market as well. And not to mention, because of cooling inflation, US dollar started to weaken, which will be a good thing for those multinational, international tech companies' earnings as well. So because of the QQQ breaking up, we can see Tesla have the similar price action as well, pushing Tesla higher. Okay, second thing, Tesla actually dropped the price a lot. At the end of last year, we mentioned in the last video that Tesla actually dropped the price in China quite a bit. And this year, in January, not only continued to drop the price in China, but also in the US, there's a massive price cut overnight. 6 to 12% depends on the model of the car. Model Y is the one that got cut most heavily down, have a 12% discount. So this big discount actually boosts the demand. Now the United States and China, Tesla back orders start to come back for a few weeks now. So that means that people are actually ordering the car, and that is a lot of investors concerned about the Tesla's demand has been dropping. So that also boosts up the stock price. And if Tesla start to provide such heavy discount, the next question will be, can Tesla even maintain the gross margin? The reason Tesla stock has been so, I would say, overly valued compared to other auto companies, because its gross margin is just amazing. That we'll show in the next slide. And based on the aggressive discount that so far we have seen, originally we believe potentially this guidance in 2023, the margin will be between 15 to 20%. Because we believe some of the Model 3 in China that are being sold right now, potentially negative margin might be every car they sell is losing money because the discount is so big right now. However, in the earnings report released this week, Tesla actually is still suggesting and reading in a statement that in Q4, the gross margin is still 25.6%. That's great. What about the 2023? So Wall Street analyst asks in the earnings call, and the CFO of Tesla actually answered that average 2023 sales price across countries and models is $47,000 based on their current estimate. And with this sales price, they still think the margin will be 20% or above. And this, we think, is the biggest catalyst because with such a price drop, demand boosts up, the gross margin is still so good, Tesla stock price, therefore, just rallied so hard after the earnings. And however, we think this is a double-edged sword because right now they're providing such aggressive kind of guidance that the growth margin will be still above 20%, which is the green line over here, okay? And if they start to miss this gross margin, let's say next quarter, next quarter, we could see after such a bad earnings, Tesla stock could plummet really heavily. So if you're investing in Tesla at this stock price, current price level, that chasing a little bit after 75% of the rally, be careful. That's a risk you have to continue to monitor in the next few earnings, in the next few quarters. Just to show you why 20% or above gross margin is so impressive. This is a number, okay? Tesla 20 plus margin. The next one is actually Toyota. The margin is 7.4%. The biggest auto company in the United States, General Motors, the gross margin is 6.5%. Volkswagen, the largest German auto maker, 6.3%, right? Ford 5.9%. Honda is only 4.2%. For the China EV competitors, BYD. They sell a lot of cars. The sales volume is amazing, but they sell cheaper models. So their margin is actually lower, 2.9%. Others, NIO, Xiaopeng, XPEV, ticker name, and Li, ticker name LI. Their gross margin is all around minus 25%. They're still trying to catch up. So as long as Tesla can maintain such gross margin, way above the other auto industry players, we think Tesla stock price could potentially maintain at this stage. And not to mention the full self-driving. If a lot more Tesla owners start converting to full self-driving package, that could push the Tesla margin even higher. Even though as a Tesla owner myself, I haven't adopted that package. I think there's still a lot of debates there. So whether the conversion rate will be that good, as Lynn claimed, we just have to see. So the other risk that we have to monitor that I don't like the answer in the earning calls is if Elon Musk can continue to focus on Tesla, will be the key, right? Because right now we still see that Elon Musk spend a lot of time on Twitter. And right now the earning finished, the earning lockout period will finish as well. So will he start to sell Tesla stock to save Twitter, right? If that's going to happen, the Tesla stock price is going to drop here. So that we have to watch it. And the second, we don't get an answer about Cybertruck massive production. Elon Musk did answer in the Wall Street analyst question directly in earning calls that Cybertruck will start the production this year. However, starting the production doesn't mean it will scale out the production really quickly. That's what he said, and I agree. He believed the massive production that's scaling up will probably only happen in 2024. So we probably won't see Tesla start to dominate the pickup truck market in the United States until 2024, when a lot of competitors like F-150 Lightning from Ford and all the other EV makers sending out their EV pickup truck this year. That could erode Tesla's opportunity in this space, but we just have to wait and see. And also the China demand is still a big question mark with China economy start to slow down, right? And the other key question that Adam Jones from Morgan Stanley asked in the earning call is, can Tesla actually push a cheaper EV model production early enough to compete with BYD? And Elon Musk just said, well, we'll see. We'll answer in the future earning call. So basically, there's no answer here. But they do mention they are going to release a new product, very exciting, some point this year, but we don't know when and what is that. So I guess potentially that's a catalyst. That we just have to see what it is. So real quick disclaimer. First, we're not a financial advisor. And also, please invest at your risks. And also, we loan Tesla. Since we monitor Tesla situation has been improved in January this year. So we started shout out Tesla and loan again back to January 23rd, 2023 this year. In our Discord group, we entered at 139.2 and gradually added once we see the more risk factors start to get peeling off. So if you're interested in our Discord community, make sure to check us out on MoneyPigTrading.com and make sure to like our video and follow us on MoneyPig Trading YouTube. Thank you for watching. See you guys next time. Bye-bye.